Well, I think security token industry is looking more and more like the traditional finance industry. Say to people, it's kind of more like buying preferred stock, right? You're buying an equity, you have a performance piece, plus there's visibility and viewability of it. So I think for real companies that want to tokenize their assets, security tokens make a lot of sense. Hopefully you'll have some more price stability, but tokenizing an existing asset and making it available to more people in a more controlled way, I think is a good thing.
I think in 2019, we're going to see a lot of security tokens that were started in 2018 come to the market. They all need a place to land. They've already done some of their primary issuances, and now they need a secondary trading platform.
With the security exchanges being built out, like starting Q4 this year and then continuing next year, I think that's going to make a big difference for all the security tokens and tokenized assets out there.
Well, over the next 12 months, I think there are going to be several security token exchanges, obviously live and trading. I think there's going to be a flight to quality. People are going to be looking for real businesses that make sense to tokenize. I've been working with several that are in the real estate business, in the secondary market business, even cannabis, solar. There are a lot of these businesses that have cash flows that aren't really great fits for traditional finance, but I think will really make a lot of sense to have distributed ownership, distributed governance.
We see that tokenization of assets and tokenization of securities, like across the globe, is a very big opportunity. Now here in the US, I think the conversation has been much more around like which of the ICOs should actually be called securities and which shouldn't, and why, which is a totally different aspect, right? And there we don't have much clarity from the SEC yet, apart from obviously Bitcoin and Ethereum being utilities, and everything else is kind of something else, which is currently unknown.
The tokenization of assets, I think, is going to happen going forward. I think it's going to be a gigantic market in 19 and 2020. It's not going to be for every single security out there or every single asset, but certain assets and certain securities and funds, it makes perfect sense. And what I see is the tokenization of that security or that asset. The technology is actually relatively easy. It's the legality of it. It hasn't been tested in the court of law whether a smart contract, a digital security the contract is legal and enforceable. But transferring a paper contract onto a digital contract is actually relatively easy. What's hard though is, again, the legality of it and ultimately the liquidity of it. Where are we going to find the buyers of these security tokens?
As soon as you provide liquidity for an asset, it just kind of takes on a different character and life. So, you get different types of owners into it, you get other types of investors into it, and it's just, usually there's like a premium that comes out of that. So, all of a sudden an asset that's worth X is worth X plus 20% or 30% because now there's like liquidity, it can flow much more freely to different types of buyers, and that's valuable.
I think the custodial aspect is a big challenge right now facing a lot of companies in the space. We're partners with a US broker-dealer, and that's one of the challenges they're working with now. The problem is there's no qualified custodians. So in this space, and that's also one of the challenges for institutions right now, is the custodian problem. Because right now there's not really any qualified custodians in scale that can handle, and it's above certain limits, above 150 million of assets, like institutions have to have certain requirements they'll have to fill, which right now there's not a clear solution for that.